Good evening, everybody, and welcome. Thank you so much, David, for putting up this amazing event together. This is just literally like a wealth of financial information for everybody, for every style, for every asset. So thank you so much, David, and thank you, everyone, for being here. I see the participant count is still very high for this time of the day. Okay, so I promise that I'm not going to bore you, and I have a very interesting presentation for you, how you can start generating income and also start building wealth at the same time. So before I get started, just let me know where you guys are from. Where are you guys dialing in from? Just type it in here. Just want to see where everybody, UK, oh my gosh, it's really past your bedtime. Algeria, Florida. Hey, Randy, I'm still in Detroit, Michigan, and I'm going to be going back to Florida in January. Very excited for that. Toronto, I am like 4 hours away from Toronto. Okay, Hong Kong, beautiful. Oh my gosh, you guys are all over. Munich, Germany. Oh my gosh, love Munich. Haven't been there in probably, I don't know, 20 years. Okay, I love it. So, okay, let's get started, everybody, because I have a pretty long presentation and I really hope that I'm going to finish on time. So I think David knew something when he scheduled me for 7 p.m. But anyways, today we will be talking about building your own income and wealth ecosystem from the markets. So some of you guys in here may have already, you may already have a job and you may already contribute to your retirement from that particular job. Some of you guys are thinking about a career change, and maybe you guys are thinking about producing income from the markets, just like I do. And we're going to talk about both, actually, income and wealth. And this is where your financial independence journey begins. And I actually teach traders how to generate income and also increase their wealth. For those of you that are very new here and do not know me, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that specializes in educating individuals how to day trade and swing trade the futures and the equities markets, but not limited to these two assets. You could trade anything literally that has a chart and that moves, right? Options, you could trade cryptos, whatever it is that you want to trade, you could trade it using the same method. So that's what makes it super easy. I have been doing this for over 20 years, very successfully. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I also run a swing trading service for stocks and ETFs since 2010 with transparent performance that is posted on our website. And if you want to check it out, you could go to our website, TradeOutLoud.com, go under services and punch in the stock swing trader and scroll to the very bottom of the page. I also run a trading room, the Power Cash trading room for futures, where I trade 2 hours or less. The market was very generous last week and today because we were done by 10 o'clock. So our workday was only 30 minutes, and I'm going to share with you the trades that we did today. And I have been running this trading room since 2017, and this is also backed by education. Everything is backed by education. We not only that we teach traders how to trade, but we put our money where our mouth is, and we actually show the traders how it's done. I specialize in high velocity trades. So what that means is that when I get into the market, I'm looking for the bigger move. That's the reason why I only take between 1 or 2 trades a day, sometimes 3 trades a day. Depends on how the market is lining up. But typically it's 1 trade a day and done. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, specific trigger times, specific price zone, and chart synchronicity and divergency. The reason the reason why I'm the designer is because I cannot take credit for technical analysis, but throughout the years, I have developed my own system where I'm looking at much more than support resistance, the linear support resistance that you guys are probably used to and everybody's looking at. I look for confluence points that are derived from multiple support and resistance areas, and I focus on 9 support and resistance areas. Quick disclaimer, the information that will be delivered tonight is for educational purpose only. My footprints are all over the stock exchanges. I have been on the New York Stock Exchange, the CME, CNBC, Yahoo Finance, Cheddar, etc. I'm also the winner of Benzinga's Best Financial Literacy Tool for last year. This is a category that was literally drawn out of 400 companies that are revolutionizing the fintech industry, and we were named #1 for best financial education and services that are backed by transparent performance. I'm also the winner of the trading battles in 2021 and 2022, organized by the Trading Battle. That's exactly the name of the company. And as you guys can see here, here I am right here in the middle, trading live. And this is a category for day trading, for literally scalping, because the contest is only an hour. You have to make the most amount of money in an hour, proven, okay? And not only that, but the winnings are going towards charity. So before we actually get started, I just want to ask you guys a quick question. Do you guys really know how much money we need to retire? Like if it was, hey, Randy, if I was going to ask you, how much money do you think, is just enough for you to say, hey, I'm going to retire, and live comfortably? And yes, probably $1 billion or $2 billion, the Powerball jackpot that we had last week. Yeah, that would have been enough for everybody in here. But anyways, investors feel, yeah, exactly, 1 million would help. So it's anything that has 2 commas involved, right? So here's the thing. Investors feel that they need $2.5 million to retire to maintain their lifestyle, according to a Legg Mason survey. So this is not me, this is Legg Mason. So that's about, guess what, guys, $2.2 million more than the average balance of $385,000 those individuals actually had in their 401ks or IRAs or other similar retirement plans. And this is an average of over 87%. That's right, 87%. So if you think about it, right, only that very small difference has what it needs to retire, right? So let's talk about how we can get there, how we could go into those 2 commas so we can retire, right? There are 2 ways in my personal approach. So my personal approach is the income, and that is through day trading. Like I said, many of you guys, and if you already have a full-time job, if you love your job, just do what you were doing. But make sure you put something aside that we're going to talk about later. If you don't have a job that you love, and if you want to take on, for example, a career in trading as a day trader, you can obviously start making money in the market. I'm not saying it's easy. It's going to be the hardest thing that you have ever done in your whole entire life. Yes, and I know I make it pretty simple and sound pretty simple when I'm teaching my courses and when I'm in the trading room, and we keep it super fun and light. But believe me, there are over 20 years of experience that I bring to the courses, that I bring to the trading room. And for me, yes, it's fun right now, and I love what I'm doing. I wouldn't do anything else. And I think that if you put your mind to it and your dedication, you could get where I'm right now. So you can generate income from the markets. Why can you generate income from the markets, only from day trading, because day trading is the style of trading where you could actually go in and out of the market within minutes or within an hour or by the end of the trading day. So at the end of the day, your cash. So what that means is that with the profits that you made that particular day, you could go anywhere and buy whatever you want. You have access, instant access to your cash. So you can literally use the cash that you have in your portfolio. Now, wealth, right? And one other thing here, make sure, and this is just applies to me personally, I like to have access to my cash at all times. I mean, call me whatever you want to call me, but yes, I want to have access to my cash. So make sure that the broker that you're using is able to provide you with a Visa card, a MasterCard, or something where you can access your cash that minute that you close the trade. Okay, that's valid for me. I use TD Ameritrade. Like I said, I'm not affiliated with them in any way, but this is number one for me. Okay, and then wealth, right? Wealth, you can achieve wealth through swing trading and investing. Swing trading is the style of trading where you hold positions from 2 days to about 2 weeks. And investing is where you hold positions from 2 weeks to years and even decades. So when you close a position in your investing account or in your swing trading account, that is when you have access to the profits in your account. Compounding is how you are going to get to grow your account systematically. So think about this, $500 a month times 12 months, that is about $6,000 a year. That is if you put aside, right? Imagine now that you buy a stock worth of $500 every month. For example, and you don't have to go outside of your box, just think, where am I shopping? What am I buying? What is around me? Because when I pick stocks, I want to make sure that I pick stocks that I understand. For example, I like to trade and invest in stocks that I purchase for companies that I purchase from, companies that I go to. For example, Chewy, I buy my pet food from Chewy. I love the company. I love what they're doing. And I think it's a great company. So I invested in Chewy long-term. For example, a company like McDonald's, company like Costco. Think about this. Whenever I go, and I'm a Costco shopper, whenever I go to Costco, I'm finding a really hard time finding a parking spot. That's right. I could barely find a parking spot. The parking is always full. The store is always full. So they must be doing something right. Well, let's check them out. This is an example of Costco. This is a technical chart of Costco. This is actually a monthly chart of Costco. And as you can see here, the first time when I invested in Costco was the year of grace 2009. Now, some of you guys may know what happened in 2009. It was the big market rotation from the financial pullback, right? From the financial collapse that we had. So in 2009, when we had the turnaround, you guys can see it right here. In about April, I bought some Costco shares, but that's not the only time when I bought Costco, because I have my footprints all throughout these candlesticks. But I just wanted to show you that in 2009, it was priced at 40. Oops, sorry. This is a typo. It was priced at $46. 46, not 42. Sorry. This is a typo. So the company had a growth of over 1,200% since then. You could see it right here, 12,000%. Now, obviously, if you need money along the line, you can pull some money in when you're having these rotations and when the market is getting extended, yes, but go back in, right? Go back in. So in 2019, $46. This is where the stock was at. In 2020, we had a high of over $600. I think it was like 611 or something like that. And now in November, it was priced at 509. Not much difference, right? So with a $500 risk, think about this. If you would have took $500 out of your income and say, hey, I'm going to invest it in Costco. Now you would have 13 times the value of your initial investment, 13 times. So $500 in 2009, right now you would have in your portfolio $6,500. But remember, you keep on adding and you keep on putting money into the market in these companies that you know and trust and see that they're doing well and growing. You're putting more money. So I can almost bet that a person that is investing in a company like Costco keeps on putting money into the same keeps on putting money into the same company, and therefore it's probably doing 10x $6,500. But this, and again, this is with $500, everybody. Okay. All right. One of the things that I wanted to add here is that the profit that you're making each year, you're reinvesting. So this is going to snowball into a massive profit. If you're, for example, not even considering reinvesting, yeah, that would be $6,500 is a fabulous return. But if you're considering reinvesting every gain that you have on a quarterly basis or on an annual basis from this one stock, you would minimally have at least 10x, 20x in it. Okay. This is how Warren Buffett, his style of trading works. You do not need a huge trading account or a huge investing account to start trading or to start investing. You don't. I showed you can start with $500. It's all you can even start with $50. The simple steps to becoming an investor are: number one, you open an account. TD Ameritrade, Fidelity, TradeStation, any good broker out there. The second thing is that you have to determine your risk tolerance. And we're going to talk about this a little later. The third thing is that you have to find a stock that you know and you love, right? I like to trade, like I said, Target. I like to trade Costco. I like to trade McDonald's. I like to trade Apple. I like to trade Amazon. So I have my own trading universe, and you don't have to have a really wide trading universe. In fact, now that we're coming into the end of the year, remember there is a strategy to trade into the end of the year. It's called the dogs of the Dow. All right. And that is for window dressing. That is totally different. But you could choose, for example, to trade the Dow, right? Dow stock. There are only 30 stocks, right? So you have Apple, you have Boeing, you have McDonald's, you have Home Depot. You have 30 stocks that are amazing to trade. You just can pick one of those or a basket of those. The fourth thing that you need to do is look at the technicals, because even with investing, there's a catch. Don't buy something that is very extended from any kind of support and it's peaking and it's just making new highs. You're buying it at 52-week high or something like that. No, just wait for a technical pullback into an area of some kind of support and look for a pattern that shows you that the price action is ready to rotate and continue higher. And then you just hit the buy button and sit back and evaluate the stock on a quarterly basis, because you're not going to evaluate it on a monthly basis. Evaluate it on a quarterly basis. And if you have made some profit into it, pull the profits out and reinvest the profits into the same stock. Here's what Warren Buffett said: if you don't find a way to make money while you sleep, you will work until you die. That's right. If I would have had the same job now that I had 20 years ago when I quit my job at a beautiful company, guess what? I would still be working for the company. I would not be here financially if I had continued to work for the same company. So let's talk a little bit about this compounding thing, right? Do I have your interest now? Okay. So day trading is an income style of trading. I'm going to share with you a quick peek into my portfolio, so you can have an idea of what money I can make day trading. So day trading is for income creation. You're creating the income from which you can pay your bills, you can pay your living expenses, you can pay your credit cards, you can pay whatever it is that you pay, your shopping, your vacations, etc. You pay it from your day trading activity. Whatever is left over from paying everything out from your expenses, you're putting into a swing trading account and into an investing account. What I truly recommend is that have 3 accounts. Okay, one for day trading because you're wearing small time frame hats, one for swing trading where you're going to have that intermediate style of trading from 2 days to 2 weeks, and then investing. Your investing portfolio, you should not touch your investing portfolio. The reality is that you should be looking at your investing portfolio just 2 minutes per month. That's it. That's how much you should manage it. And for the swing trading account, it should take you less than 10 minutes a day. That's how much time you need to allocate to swing trading. Yes, you will have to do research on it if you want to do it on your own, or you could just follow our service, the Stock Swing Trader, where I do all the work for you. I scan for stocks, I prep for the week, I send you all the information, all the news releases, all the earnings, everything that we're watching, I'm scanning for you, everything. Why I day trade futures? I day trade futures just for the income. So for example, today, I took this trade in the Dow, right? I took that 785 and I actually made 100 points. This is the last trail. I'm going to show you exactly how that is. And I made $5,400 in this trade, 0.27%. It's not all wins. You could see that I have some losses here, but overall I am up in my performance, right? And this is actually, so I hit the 60-day performance. This is where I'm at in 60 days. So why do I swing trade? I swing trade so I can have my money work for me. I swing trade, so scan and set alerts, orders, etc. It's about 30 minutes a week. I'm not exaggerating, like I said, with all the work. Then all you have to do throughout the day, adjust some stops, order or enter some other trades, and that's about 10 minutes a day. And for investing, scan for new opportunities, 20 minutes per month. It's not even going to take you 20 minutes per month, but I, just give or take 20 minutes because you're going to check out your portfolio. You're going to get through all the stocks that you have in your investing portfolio to see what's going on. You're going to check out your dividends and all that stuff. Okay, so the most important thing, whether you're day trading or swing trading, you have to determine your risk. Risk is the most important thing that you could do for your day trading or swing trading. Typically, the risk allocated for day trading or swing trading is 1 to 3% of your account size per trade. So if you have, for example, $50,000 in your account, your risk per trade should be $500, not more, not less if you're using 1%. 1% is very conservative. And if you want to be conservative, that is where you need to be at. If you're experienced, if you know a little bit more about what you're doing and you want to take on more risk, then 3% is for you, but not more than 3%. Remember, the more you grow your percentage, if you're hitting a rough patch into the market, you can have pretty big drawdowns in your account, and it might be a little bit harder to come back from those pullbacks. However, determining the risk tolerance for investing is a little bit different. Risk tolerance is your ability and willingness to live through a decline in the value of your investments. Now, we know that, this year we had pretty consistent pullbacks into the market, kind of like a lame pullback for a recession, but hey, it's not over yet. And if you're looking at the technical charts, yes, we're running a little bit higher, but we're approaching a massive level of resistance that is on the weekly chart, from which two prior times throughout a few months ago, price was rejected and came back down. So it's going to be very interesting how the price action is going to evolve within the month of November and December. So when you're trying to determine your risk tolerance, ask yourself how comfortable you feel maintaining your positions when the stock market is experiencing large declines. Because your risk tolerance plays a crucial role in your game plan for growing your money without stressing about it daily. So here's a quick tip about risk tolerance. And there are three main questions that you need to ask yourself. Number one is, what is your investment objective? I mean, why are you investing in the market? Are you investing regularly and looking to grow the value of your nest egg? Or are you already have a decent nest egg, and rather than grow it, you're looking to preserve it and live off the income it generates? Each will convey a different tolerance for downside price risk. So you see the difference here. Question number two, when do you need the money, right? So if you're like me and you love money and you love cash, you love to spend, you love to go places, that's why day trading is so awesome, because day trading can really offer that for you. And then if you're talking about money that you don't need right away and say, hey, I'm going to need it in 5 years from now. Oh, and by the way, do you guys know that if you have an investing account, and I don't know, if you have 1 million, 2 million, 3 million, and if you see a beautiful 5 million mansion that you want to buy, you can actually borrow from your account. That's right. You can borrow from your account. You don't have to have a mortgage, right? So your time horizon is crucial, is a crucial piece of the equation. The sooner you need the money, the lower your risk tolerance should be. Money you need for a home down payment next year has an entirely different time horizon than the money you're accumulating for retirement that is still years away. So it all depends on your time horizon, because if you're looking right now and say, hey, there's a good pullback in Costco and I think I'm going to get a little bit more in here, or I'm going to start investing in Costco a little bit more aggressively, I'm going to put that 3% on the line, right? It all depends, right? It all depends on how soon and what objectives you guys have. Because remember, you can get there to swing trading. Swing trading is holding positions from 2 days to 2 weeks, and you could do that a little bit more aggressively. How would you react if your portfolio lost 20% this year? Well, let me tell you something. Most of the portfolios have lost 20% or more this year. Assessing your risk tolerance involves thinking about hypothetical challenges and worst case scenarios. If your investment lost 20% of its value, would you lose sleep at night over it? Would you? And pull out all the funds out? Or would you leave it invested and consider putting even more money in the market to capitalize on the discount, on the clearance rack? Isn't it better to buy Amazon now? Isn't it better to buy Apple now? Isn't it better to have a piece of Google now? I'm just saying. So why is it important to learn how to trade or invest? First of all, for financial independence and peace of mind. When you are giving your money to someone else to manage it for you, aside from really high fees, you're just a number. They don't care if you're making money or losing money because they're getting their fees. So learn how to trade. You can be in control over your money. You can invest your own money. You can trade your own money. You can generate income. You can start generating wealth. You can start compounding in the market. Be in control over your life. Work from home. Customize your trading hours to fit your lifestyle. I trade 2 hours or less. And most of the days, I trade less than 30 minutes. You can come into my trading room. There are some traders that are joining for the first time. And if they're late in the first 30 minutes, guess what? Most of the time I shut the room down. And they email me, they go like, I can't log into the room. It's like, the room is closed right now. We made our money and we're done. That's what trading is all about. Making a couple of $1,000s and done, right? That's a lifestyle. We gave up. We gave up going to work. We gave up the rat race. You could pay off your mortgage. You could pay off your credit cards. You could pay off your student loans. You could take vacations. And yes, you can travel and trade at the same time. I'm doing it all the time. If I go and if I travel, yes, the trading room is going to be open. I'm on vacation. Yes, the trading room is going to be open. If I travel and I'm in the road, yes, the trading room is going to be open. I take it with me. No, it's not a chore. Is it a chore to make money? No. And if you love what you're doing, why would you stop? You can spend more time with yourself and your family. And guess what? Protection in recession. Because I will teach you how to create a recession resistant portfolio where you can make money as the market is going down. You're hedging your investing portfolio with your day trading and your swing trading portfolio. And yes, it's inflation proof because traders do not have to worry about inflation. You don't. All you have to do is make more money in the market and compound it. Now, let's take a quick look back because we're combining the styles of trading. And by the way, I do have presentations on Tuesday, on Wednesday, and Thursday. And on these 3 dates, I am going to talk specifically about each style of trading. But today, I wanted to talk about day trading. I wanted to talk about swing trading. I wanted to talk about investing as well. I never recommend using a 401k unless you have an employer match. They're basically just index funds that over diversify your cash across a variety of unknown businesses. You have no control over it. No control. I'm going to show you how I have been there. No control. So, how can you do the research or believe in a company you're putting your money towards if you don't know what they are? You can't. You can't. Because they invest your money for you. But if there's an employer match, that's a different thing, and you should go for it. An employer match is basically free money, and in the investing world, that's always awesome because you're getting more money. A lot of employers will match your contribution at a minimum of 1%. So take advantage of that and let it build. Especially if you're in your 20s or 30s, you have a long way to go. But as interesting a 401k may be, if you have a really good employer, I highly recommend a Roth IRA account for the rest of us. A Roth IRA offers a ton of freedom and flexibility on where you put your money. You can research any company and buy shares of that specific company. You can buy or sell out of those stocks at any time you want. So you're never stuck in a collection of stocks you can't control. On top of that, Roth IRAs are post-tax money. So that means that you contribute to your Roth IRA from your take-home pay. And that means that when you're ready to retire, all the money in the account is yours. Well, with a 401k, the money is contributed pre-tax. So guess what? When you take it out of when you take it out in retirement, they tax it at whatever the current rate is. And spoiler alert, taxes are only likely to go up in the future, not down. Do you guys remember 2020? Do you guys remember 2018? Yeah, me too. Didn't you guys love the taxes then? I sure did. You can manage your money better than any professional. And here's why. You get huge fees. And trust me, I have had my money with a hedge fund. I had my 401k invested as well. And I pulled my money out because I am investing it myself. I'm trading it myself. Huge fees are charged for your long-term money in 401ks. And I mean huge. Monthly management fees, approximately $300 a month. That is $3,600 a year. Now think about this, $3,600 a year. And if you retire in 30 years, that's $108,000 just in management fees. Imagine if you would take the management fee and invest it in the market every single month and just buy, I don't know, I'm going to buy $300 worth of Amazon. I'm going to buy $300 worth of Apple. I'm going to buy $300 worth of Costco. I'm going to buy $300 worth of McDonald's. I'm going to buy $300 off of, I don't know, Goldman Sachs. Right? Think about that. Think about that $300 a month. And I'm going to show you something. Okay, so funds do not care if you make money or lose money. This is January 1st, 2022. So my accountant really suggested that, hey, you really need to get a 401k plan for your company and your employees because guess what? I was earning too much. Okay, so this is the account. You can see my company name right here, 401k plan. But here was the agreement. I said, yes, I'm going to go that route, but I have to manage the money and I want to buy the stocks that I want. So I don't want to be restricted to a fund. I don't want my money being thrown in one of those funds where you have no idea what it's made of, right? You have no idea what companies are in those funds because anyways, I'm not going to get into it. So guess what? I contributed and contributed and contributed and contributed. And I really did not want to invest anything in January. The market was declining. And I'm like, yeah, I'm just waiting. I already set up an account with TD Ameritrade for my 401k. So I'm going to manage my own money, buy my own stocks. And I thought that my money was just sitting in that 401k account. Guess what? Surprise, surprise, surprise. When I transferred the funds right here, my money automatically was invested. At the end of April, my account was down 5.5%. You can see it right here. Okay, so here's the date. And here's the performance from January 1st this year to March 31st, 2022. Here it is, down 5%. Okay, not fun. Not fun for somebody that is making money every single month after month after month, compounding. And I have this, but it's losing me money. That's an insult. So anyway, I liquidated that account. I'm done with the 401ks. Okay. So anyways, invested you. And look, when you invest in yourself, you invest basically in a high income producing skill, right? That is going to generate the best return on your investment. This is the money that is sitting in our bank accounts right now. If you're having money that is sitting in a savings account, this is what's happening to it. It's like I can feel and I can smell the burn, right? Inflation, recession, pandemic. I mean, what else, right? This is burning money. You guys see it. The inflation is through the roof. What is it? Almost 10%. There's only one way to stop burning that money, and that is to make more money, and that is having your money in the market. Make more money in the market, and this time you're in complete control. And now is the best time to learn and actually to learn. I'm going to tell you why. First of all, we're heading into the end of the year. Usually the end of the year is great to prep for 2023. 2023 is also going to be an amazing year for trading. 2022 was amazing for us, for Trade Out Loud traders and members. Amazing. And it was a very hard year. It is a year where hedge funds are massively down. It is a year when a lot of investors and pension funds lost a lot of money. And it was a very difficult year, but not if you know how to trade. You're going to prep for the next earnings season, which is fuel for the market. It starts in January. We're going to experience more volatility. This is not your grandfather's market. This is a wild, wicked, but also generous market for the astute trader. Algos are hotter than ever, and we have a substantial technical decline. Investing is not a game. Trading is not a game. It's not gamble. So you really need to know what you're doing in the market. And once you know what you're doing in the market, and once you learn how it's done, you gain confidence, and there's nothing stopping you from what's to come. But you need to have the commitment. You need to be willing to put on the work, because nothing comes without any kind of work. The most important parts of trading are rarely discussed, like confidence, conviction, patience, mental toughness, discipline, and yes, education. These factors represent 90% of the battle, and regardless of your trading philosophy, if your head's not right, you won't be successful. If you're waking up every day and saying, oh, I gotta go and turn on my freaking computer, and I hate trading, and this is going to be hard, and it's like I'm not seeing it, and just a waste of time, and I'm sitting here, I'm watching candlesticks, you're not going to make it. Okay, surround yourself with people that have been doing it for a while, and people that have a transparent portfolio. That is how you can differentiate successful traders that can help you by other traders that are, in trading just for marketing reasons. So trading and investing 101. What is trading? What is investing? Do you think it's all about strategy? Oh, if I have a strategy, I'm going to do great. Is one strategy going to help you? Yeah, it's going to help you, but it's only going to help you probably like 5 to 10%. Managing risk and risk tolerance is going to help you. Well, yeah, but only probably like another 10%. So now you have strategy plus risk management and risk tolerance that are going to help you, what, 20%? How about nailing entries and not winging and saying, oh yeah, that's a good area? No, a good area and a good buy price is the exact price to the penny. It's not 1 cent less, and it's not 1 cent more. Entries are entries. Do you think algos give you like a trend line and they say, oh yeah, when the price comes like to this little trend line right here or this support level, oh yeah, it's time to buy? Where? What price? Where's my stop? What's my risk? What's the strategy? You see what I'm saying? Stops, you need to know, because if you're a day trader, you need to use stops. If you're a swing trader, you need stops. If you're an investor, you don't use stops. Executions. Executions are key. Laser sharp incisions into price action. Trailing strategy. A great trader has an exit system, takes profits along the way, and knows how to trail. This is the hardest thing, trailing. A good trader will always trail the trade live for you. Because what if I came in the trading room and say, I like, I like the S&P here, long, definitely. I see it run into these targets, but I'm not giving you my entry price. I'm not giving you my stop price. And most of all, I'm not trailing it. So when it gets close to target or halfway into target, what do you do? What do you do if the price turns around? What do you do if you're trading Apple and the stock turns around? What do you do? You need a system that will protect your capital, that will protect your gains, take profits, know where to take profits, how to take profits, what percentage of the profit you need to take into each target. Psychology. We teach psychology as well. Trading psychology. Psychology is super important. You can't have a strategy or entries stops if you don't have a good psychological approach to trading and handling different market conditions. I was talking today in the trading room, and I was saying that what was very interesting within these whole, analyzing 2022, like throughout all these pullbacks that we had in the market, and most of the down days were gap downs in the market, or the moves for our day trades happen overnight. So we made money in terms of day trading, believe it or not, mostly long. We had very few short positions. Can you imagine if we would have shorted in the New York trading session? Because usually the rebound was in the New York trading session. So you need to have a strategy for that. You need to, know the trailing strategy. And the art is of putting the puzzle together, because it's a system. It's a system. It's not a strategy. It's not trailing. It's not entries. It's not stops. It's the whole system. And as a trader, you need to learn the system. Investing in yourself. Investing in yourself is what makes the difference. The best investment you will ever make is in yourself, Warren Buffett. Education is power, and you only need to learn it once. I know it takes time to digest the material and to digest everything and experience in the market. And guess what? Even after you learn it, it's going to take you about 3 years to digest the market cycles. That's right. That's what my mentor told me when I first started day trading. He said, you know what? You're doing really well. You're making money, but it's going to take you 3 years until you understand everything and put everything together. And he was right. Although I was making money, I was still making some mistakes. I learned all the stopping me. If you want the keys to the kingdom that will unlock any chart, anytime from any instrument, stocks, futures, forex, options, cryptocurrencies, anything that you trade, day trading, swing trading, investing, the keys can be yours, and you only need to learn it once. Most people think they can learn how to trade on their own and become good on their own and excel on their own. But how many great sports people have not had coaching? I work and coach many great and successful traders. In fact, every single day in the trading room, the trading room that we have and the active investor service that we provide is basically continuing education, because I trade live every single day in front of my traders. So day trading, because we're back to day trading, you can literally start generating for $500 to $5,000 a day, depending on your account and depending on how much you're risking, right? Remember the 1 to 3%. I trade with the institutional money flow. I don't follow the market. I am in sync with the market. There's a huge difference. I don't chase, because when you're chasing, you're always behind, because you're chasing, you're going after something. I'm not going after anything. I'm doing the same, and I'm walking the same steps and doing the same moves that institutions do. I trade from 9:30 to about 11:30. But if I have a good trade and I'm done, I'm done. And if I'm done in 10 minutes, then I'm done in 10 minutes. Some days, yeah, we're there till 11:30 or 12 o'clock or even 1 o'clock or 2 o'clock, depending on where we close the trade. Because if, for example, we're still in the trade at 12 o'clock, I'm not going to shut the room down because I'm still actively in the trade. So let's talk about that $500. How would you feel if you had $500 consistently? Not every day, because you're going to have down days. You're going to have some days you're going to make $500. Some days you're going to make $2,000. And some days you're going to risk, some days you're going to lose 500. Some days you're going to lose, let's say, 1,000. But for example, if you're risking $500, right? What does $500 mean? That's 100 points in the Dow. That's what I did today in the trading room. $500 in the Dow is 100 points. The S&P 10 points is $50, where one point is $50. NASDAQ 25 points is $500. 1 point is $20. So it's not hard with this market fluctuation. You could see NASDAQ is up and down 100 points like nothing. What, you can't do 25 points in the market? You can't do 10 points in S&P? Even if it takes you 2 days or 3 days? I literally would not get out of bed if I know that I would not make 5 to 7, if I would not make 7, 10, or 20 points in S&P. That's my high velocity approach. But this is what we did today. This is our entry point in the Dow. This is my exit point. 100-point move in the market. That's $500 per contract. You guys saw I showed you my portfolio, right? $5,000, 100 points. Here we go, right? That's how you do it. This is my trade. I had 12 contracts. I position sized $5,400. You could see it right here. You could see it with the timing. I got the trade at 9:55 and 27 seconds. I sold 10 contracts at 885 for 100 points, $5,000. I'm not going to let that go away. And then I trailed, my last trail, it was 825. Here it is, 825. This is my trade. Trade duration. Trade duration. What I trade, futures. This is what I day trade. This is what I day trade. I swing trade commodities. I swing trade stocks, ETFs. This is what I day trade. I specialize on the Dow, the S&P, NASDAQ, and Russell, gold and oil. Mostly I like to swing trade. The rest of the panel, softs, metals, grains, I like to swing. Trading is a rule-based system. It's about finding highest trades, waiting for a setup, find a precise execution, good money management skills, and patience. Why futures? Well, in futures, you have really good, reliable volume, especially if you're trading the New York trading session. There's really good volume in the Asian session and even in the London session at times. No special indicators. No, I don't use any special indicators. You guys saw my charts. No special indicators. You guys see it? No special indicators. Just few moving averages. That's all there is. Okay. And of course, there's no pump and dump. It's safe from rumors and rumors. And the one thing that I truly like is that it's a 24-hour market hands-on risk. So if I want to take a trade right now at 8 o'clock, I will take a trade. If I want to sell something, I can sell it. So if you want to become a futures trader, the minimum account to open an account with a reputable broker is $5,000. I don't recommend, like, you could do whatever you want, but I don't recommend it. You have $500 and you want to open an account. What's that going to do for you? You can't even position size properly for that account. Not even to trade micros. You're going to blow that account instantly. The way it's different from from a stock trading account is that a stock trading account, you need to have a minimum requirement is $25,000, but you need to have 30,000, because if you open an account with 25,000, if you lose a penny, then your day trading status is out the door. Time versus money. Well, you guys know that if you trade stocks, 1 cent is $1. And if you're trading, for example, NASDAQ, right? I have an example here with the Qs and NASDAQ futures, and 1 point in NASDAQ futures is $20. So let me show you here something very interesting. The trade duration is 20 minutes, right? 20 minutes off the open. So for example, if you take a trade, right? If you take a trade using the same buying power. So for example, I have here $16,000 in buying power. You take 100 shares buying the Qs, and that's bringing you a profit of $237. If I'm trading NASDAQ, and by the way, the same risk, 1%, I'm using the same risk, 1%. I use 1%. You can see it here, 1 contract, right? Same buying power, similar buying power, and $2,000. So would you rather trade the Qs, or would you rather trade NASDAQ futures? But wait, there's more small accounts, right? We were talking about those accounts that are $5,000. You could trade it with 1 contract. Here you have $181. Buying power, $1,700. That's about 10%, right, of that $5,000 account. Do you guys know that hedge funds make on an average 8% per year? 8% per year. You should look into our performance portfolio that is on our website. Go to the services tab, go to the trading room, and scroll down to the bottom of the page. Check our performance portfolio. We have hedge funds that are in our room. We have financial advisors that are in our room. We have 2 brokers that are in our room. I am not kidding you guys. All right. So stock market versus futures market, right? Would you rather go for a market that only trades from 9:30 to 4 o'clock, or for a close to 24-hour market? I would go for the 24-hour market, because if there is something that is happening in the market, I want to be in the market. So is it easy to succeed in trading? It's not hard to succeed in trading if you have the right approach, mindset, and if you have a really good coach. If trading was easy as buying an indicator or just reading 20 books, everybody would be rich, but you need experience. And why futures? Well, I told you guys, you want the income, you want to have a career change. Well, you can trade from home. Can anyone make money? Well, yes, educated traders and mentor traders will make the money. And guess what? No education, no money, no patience, no money. Right? If you're jumping into trades, what's that going to bring you? You're going to drain out your account. And remember, trading is not for everyone. We trade with a very structured approach. We trade live every day, highly successful system that is in sync with the power moves, with the institutional money flow in the first 2 hours, and enable us to profit on momentum moves at specific times, locations, and precise technical patterns. And our method really overrides any kind of earnings, dark pool, artificial indicator, and even news. Here are some reviews, 5-star reviews. So I want to present a course that we will be teaching in January. Yes, I'm taking the time off. I think I deserve it, right? In November and December. And in fact, this year, I haven't really done a lot of presentations. I haven't done webinars. I know, for months, because, well, I'm enjoying my life. So if you want to trade straight free, we have a course. We're going to do it live again, but it's going to be in January, where we teach how to create this we will teach you the system, and we will teach you how to trace institutional levels to see where the trades are at. We will teach you how to trade stress-free. And by the way, I really trade stress-free. I have no stress whatsoever, even if I'm in a trade. Why? Because I know my risk. I know the know-how. I know everything. We have precise buy and sell zones to the penny. We have management, risk management, highest patterns. We're going to teach you everything from A to Z, and most importantly, how to put the puzzle together. And this program is for you if you're losing money in the market, if you don't have a system, if you do not have a process that eliminates emotions, if you lack confidence, this course will change your life. And don't take my word for it. You can come into our trade. I'm sorry about that. You can come into our trading room and, you know, do the 1-day experience or the 5-day experience. We have multiple plans there, you know, and just don't take my word for it. And then come in there and ask and say, hey, is this course good, of any good? Are you guys making money? And you're going to see what the trading room is going to say. Everybody's making money. Everybody that has a plan and, you know, everybody that has been taught what to do is making money. We teach you exactly when, where, and what to do at different times. We even give you a trading plan. What? Yes, we provide you guys with a trading plan. So what that means is that, you know, we give you a plan of how to apply a plan that you can apply in the market, and literally it's going to change your life because it's going to walk you through every second of the day. It's going to tell you what exactly you are going to expect. We teach you advanced risk management and advanced technical analysis, most important day trading chart patterns, and how to exploit them for above average gains, because we're not looking just for gains. We're looking for above average gains. How to use simple yet powerful indicators to maximize your timing, etc., etc., etc. So learning how to trade is not inexpensive, and it can be a good chunk of change, but compared to the trading losses and mistakes some traders make, this is nothing, because trading is like learning how to drive. It could be overwhelming because remember the first time when you set foot in a car, you have to keep track of your gas, the brakes, mirrors, so you don't crash. But once you got used to it all, you didn't have to worry about anything. All you had to worry about is your destination, because it becomes your second nature. And trading is the same. All you have to do is keep track of entry, stop, market conditions, and take profit. And of course, hit the gas when you're stopping out, right? Once you get used to it all, it becomes instinctive. Wouldn't it be helpful to have someone that can teach you all this? Now, would it be okay for you guys for me to present what we're going to share with you in next year? Well, this is the Power Income Futures Day Trading course. It is $5,099. It's actually $16 a day for 365 days. Think about it. Would you rather buy a coffee or learn a high income producing skill? High income producing skill. So January 2023 through the 27th, it's a 5-day course from 2 o'clock to 4:30. We have a Black Friday offer. You get 3 months trading room access. And if you join today or this week or this moment, you're going to get automatically entered into the room. Oh, did I tell you the best thing? So this 3-month trading room access is actually January, February, and March. So you will get the trading room access for free for half of November, and you will get it for whole December. So you're basically going to have like 4.5 months of trading room access. If you want to learn more, thank you so much, David, for posting it in there. You could go to TradeOutLoud.com/futures and find out more, or you can email us at info@TradeOutLoud.com. Thanks so much, David, and thanks so much, everybody, for sticking around till 8 o'clock.